Let's break down today's Nifty market structure for 11th February 2026. This is behavior analysis only. No predictions, no trade ideas, just structure. Expiry tracked for the date 17th February. Price context. Today's high was around 26,000. The low was around 25,900 and we closed at 25,953. Price briefly moved above 26,000 during the session, but it did not hold there. By the close, the price was back inside the 25,900 to 26,000 band. That already tells us something important. Exploration happened, acceptance did not. Core market state. Let's apply the structural test. Was activity high? Yes. Did price move proportionally? No. Were both calls and puts active? Very much. Was volatility expanded? No. Were futures aggressively building? No. This is an absorption or control environment. High activity but orderly handling. Cash market participation. Total cash turnover crossed rupees 1.12 lakh crore. Liquidity remained strong throughout the day. There was no drying up into the close. This was not a thin market. Futures behavior. Index futures open interest closed around 3.39 lakh contracts, slightly higher than the previous day. But intraday we saw trimming into the close. That means futures were active but not aggressively expanding exposure. No structural stress. Options overview. Very heavy options volumes, but here is the key. Net open interest was lower compared to the previous trade day. That means lots of trading happened, but overall exposure compressed. This reflects position adjustment, not panic build-up. Call side structure. The dominant strikes at 25,900, 25,950 and 26,000. 26,000 remains the largest call concentration even after price tested 26,000 today. Call open interest increased, premiums fell, implied volatility stayed near 8%. That tells us supply was being added comfortably. No sign of forced covering. The 26,000 ceiling remains structurally heavy. Put side structure. Put activity was also strong. Concentration built around 25,900, 25,950 and at 26,000. But premiums steadily declined. Implied volatility stayed around 9.7 to 10%. There was no panic hedge demand. Protection was added in a calm manner. Volatility condition. Call IV around 8 to 8.4%. Put IV around 9.7 to 10%. No expansion even when price crossed 26,000. Options did not price instability. That's important. Strike interaction zone. Throughout the session, price kept returning to 25,900 to 26,000. That band controlled the day. It acted as the structural gravity zone. Final market state. Today showed high liquidity, heavy two-sided positioning, strong 26,000 call presence, controlled put structure below, stable futures, compressed volatility. One-line description, high participation with structured absorption and controlled expiry positioning. No disorder into the close. Carry forward structure. For the next session, we continue tracking 26,000 as the dominant call concentration, 25,900 to 25,950 as the central interaction band, compressed volatility, stable futures positioning. Closing. This breakdown explains market behavior only. It does not suggest any action. I will see you tomorrow for the next structural update. Stay structured.